Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time that the market tested its zone, it got rejected to the upside quite aggressively. And at the moment, the market has just entered quite deep inside of this exact same level of historical monthly demand and support, from which there is a good probability of seeing a potential reaction and rejection to the upside. So here in the monthly, everything seems quite bullish. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can notice that the last move was actually an impulse to the downside. Now, no market can just go down in a straight line. Every downtrend is created by a series of impulses and corrections, because every time there is a correction is an opportunity for new sellers to come into the market and drive the price lower. So in a situation like this, since the last move was an impulse, the next logical step would be for the market to follow through with a correction. Now, in this case, if we have the impulse and we want to measure a potential retracement level, we have to take our Fibonacci from the high to the low of the impulse leg. And this shows us how we have a 0.32 retracement lining up exactly here, that this market could have a good probability of wanting to retrace to. So from a weekly standpoint, we have already a first potential upside target at this 0.32 of the Fibonacci taken on the weekly impulse leg. So here on the weekly, everything seems quite clear. We can also notice, if we look left, that the zone that the market is currently testing is exactly a previous level of a essentially shift of this market from a bearish market to a bullish market, and the market pivoted exactly at this level, confirming this as a very strong demand and support zone. So as the market now seems overextended to the downside and in need of starting this correction, this could easily be a potential level from which the next correction to the upside starts. That is definitely possible. Dropping down on the daily time frame, what do we see? Now, here on the daily, we start to see the market moving sideways. This usually means that we're starting to see an accumulation phase, and inside of an accumulation level, essentially institutions are adding longs. Now, what is the problem? The problem in this case is that we still don't have the new data, because since it is Christmas, we don't know inside of this accumulation zone, so inside of this range, what institutions are doing, because we still don't have the new data. In fact, if we go and see what we have when it comes to the commitment of traders, and we look at the data precisely for the AUD, which is actually AUDUSD, because all currencies on the spot are traded against the USD. So if we're looking at the data for the AUD, we're actually already looking at AUDUSD. If we look here at this, and we look at the net positions, we can see how with the last reports, we have seen a massive decrease in net positions, going from 31k to minus 61k net positions, with institutions increasing their shorts and decreasing their longs. The shorts went from 53k to 94k, and longs went from 111k down to 32k. So it seems like institutions are actually shorting AUDUSD, and that makes perfectly sense, because if we look at the price has been going lower, fueled by this institutional shorting, which we can clearly see here from the data. The problem is that the last available report, because of the Christmas holidays, is of the 12th, essentially is of the 17th essentially of December. So it is quite a long time ago, and we still don't have the new report. So we don't know yet what institutions have been doing inside of this level. So we have to wait for the new release. Now, if the new release will show that inside of here, we're starting to see essentially institutions longing AUDUSD, so adding longs and closing shorts, at that point, there is an increased probability of the market creating that rejection to the upside and correction that we wanted to see when we were looking at the market on the weekly time frame, noting how this level was actually a previous demand and support zone. So if with the new report we will start to see institutions adding longs inside of here, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, for the market to reject to the upside that very strong monthly and weekly demand and support area. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot the special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.